Ever wondered how businesses manage their taxes under the Goods and Services Tax Act, especially when it comes to the Input Tax Credit, ITC? This concept is not only crucial for businesses but also for those studying tax law. Let's dive into the world of ITC under the GST Act. The Goods and Services Tax Act, or GST Act, isn't just a basic tax reform, it's more akin to a revolution in the manner businesses operate. Now, let's dive into the GST Act, showcasing it with illustrations. Visualize GST as an all-inclusive, multi-layered, destination-anchored tax levied on every increment in value. Picture a toy factory, if you will. At each rung of production, from the sourcing of raw materials to the completion of the end product, makes its mark. Our spotlight today will shine on the fragments of the GST Act that concern the Input Tax Credit, or ITC. Section 16, for instance, outlines the qualifications and stipulations for availing input tax credit. View it as a gatekeeper, deciding who has the right to credit. Suppose you're a manufacturer who has forked out GST on raw materials. You have the right to claim this back as ITC. Next up, we have 17, laying down the terms for the division of credit and blocked credits. Here's an example. If you've bought items for both personal and professional utilization, this section aids in computing the part of GST that can be reclaimed as ITC. Lastly, we arrive at Section 18, elaborating on the availability of credit in special circumstances, ensuring fairness in the system. Say you have a significant amount of stock when you register for GST. This section gives you the right to claim ITC on the same. Getting to grips with these sections, coupled with practical examples, will make the practical application of ITC a piece of cake. ITC is a critical component of the GST Act, but what exactly does it entail? ITC, or Input Tax Credit, is a mechanism that allows businesses to claim credit for taxes paid on purchases. It's designed to avoid the cascading effect of taxes, leading to a seamless flow of tax credits. To claim ITC, the goods or services purchased must be used for business purposes, and the buyer must possess a tax invoice. ITC, when understood and utilized effectively, can significantly reduce a business's tax burden. So we've covered a lot of ground today, haven't we? We've delved into the depths of the GST Act, focusing particularly on the Input Tax Credit, or ITC. Remember the key importance of Sections 16, 17, and 18 in understanding how ITC works. These sections are the pillars that guide the mechanism of ITC, a crucial aspect not only for tax students but also for anyone engaged in business. Remember, understanding the GST Act and the mechanism of ITC is not just crucial for tax students but for anyone engaged in business. Stay informed and stay ahead.